Welcome back to the Tech and Real Estate Podcast, where we blend technology with real estate to give you that edge in your own market. I'm Ariel, joined by my awesome co host, Terry, and today's episode is inspired by the biggest football event of the year, which is the Super Bowl. We're calling it Playing Defense in Real Estate with AI. Hey, Terry, what do you think about our current topic?
This topic's great, Ariel. We'll be taking cues from football strategies to show you how to defend and go on offense using AI in real estate investing. Even if sports isn't your thing, you should stick around for practical tips to help spot deals and avoid costly pitfalls.
Exactly. And think of it this way. If you had a playbook that revealed where the best deals are likely to appear, you'd have a huge advantage. That's where AI tools like ChatGPT or DeepSeek can come into play. They can help you analyze market reports, population growth data, and potential investment strategies so that you're one step ahead of the competition. First up is our home field advantage section. We'll show you exactly how to use AI to find promising deals in your own backyard. All right, so for our first topic, home field advantage, imagine you're a football team playing on your own turf. You know the field conditions, you've got the crowd on your side, and you understand all the little quirks about it. In real estate, the same principle applies when you invest in locations you are familiar with, or you can easily learn about. It's all about leveraging local insights to score those best deals that you get an advantage over those who are out of state.
Absolutely, Ariel. We're talking about investing in places where you either live or spend a lot of time. The reason is simple. If you already know the area, or if you're within driving distance, you can spot unique details of the neighborhood that other outside investors might miss. Maybe you notice a new coffee shop that's always packed, or a tech company that's just about to move in. Signs that the neighborhood is on the rise.
Yeah, and one great example that we have here is one that you're familiar with, Terry, Orlando. We've seen a lot of buzz from the last 10 years for Orlando, but also in the next 25 years too. We looked at population report for growth between 2025 and 2050. According to these economic reports, Orlando is projected to keep attracting these new residents thanks to several factors like steady job creation and a robust tourism industry. So, if you're a real estate investor, that often translates to a higher demand for rentals since there's more people, and potentially also seeing more appreciation with property values rising.
Yeah. And the cool part is you don't have to be a professional researcher or hire someone out for this like you did in the past. You can use AI tools like ChatGPT or DeepSeek or Claude to review population forecasts, local job markets, and your own current real estate portfolio. For instance, you could type something like ChatGPT, can you look at Orlando's population and economic growth data between 2025 and 2050 and suggest whether it's a good market for single family rentals or not. And you'll get a quick rundown of the pros and cons, plus some context about what's driving that growth.
That's a really great tip, Terry. With just a couple sentences that you mentioned, you can get that context. And once you have that information, you can make better decisions. Maybe you realize single family homes in one zip code are in high demand because there are new schools and shopping centers nearby, like a Target. Or perhaps you learn a different zip code is popular for short term rentals because it's closer to theme parks.
Yep, you can even dig deeper by asking AI for the why. If ChatGPT says an area is up and coming, ask follow-up questions. Questions like, what major employers are driving growth there? Are there new infrastructure projects planned that might boost property values? That way, you're not just relying on vague predictions, you're getting specific reasons that back up the numbers.
Yeah, I really love that aspect. It's not just one single question and answer. It really is a back and forth conversation with whichever AI tool you're using so you can get that in-depth level feedback. And knowing those reasons can really help you stand out from other investors. When you talk to a seller or real estate agent, you can show that you are actually serious. You know your numbers because you've done the homework, you've got the data, and you understand why the neighborhood might attract more renters or homeowners in the near future.
And let's not forget about the old faithful driving for dollars. AI is powerful, but it can't replace physically seeing a neighborhood. It might reveal a quiet street, a neglected park that's about to be renovated, or a local college that's expanding. These little insights can tip you off to big opportunities, sort of like spotting a gap in the defense right before your next big play.
Yeah, I think that's a really great point that you mentioned. As much as we love to be in spreadsheets and only focus on quantitative data, it is important to have those boots on the ground. And also, it's really good to keep an eye on events as well. So, for instance, if a major sports complex or concert venue is opening up in Orlando, that could bring even more tourists or new residents looking for housing. Think of it as almost watching game film on your opponent. You're consistently always gathering intel to make the best play possible.
And remember, home field advantage doesn't necessarily mean investing in your backyard. It could be a place that you visit often or somewhere where you have family connections. The key is having or quickly developing a deep understanding of the area's trends, culture, and future prospects.
Yeah, really well said. And let's actually bring this forward to a few actionable steps to apply your home field advantage. One, use AI for local research. Ask ChatGPT or Claude about population growth, job markets, and upcoming developments. You can enter in your city name and then those pieces of context of data that you want afterwards. Second, drive the neighborhood. Get a first-hand feel for the area. Look for signs of new businesses, renovated properties, and community improvements. And then once you have collected some of this data, try to dig into the why. Don't just accept, okay, the market is hot. Actually find out the reasons behind it. Is it because we have new employers in this market? Is it because the school systems are higher than most within the given state? Or is it maybe entertainment venues that are causing this rise? And then for fourth, you want to be able to network locally. So real estate is all about working with other people in the industry. You want to talk to real estate agents or other investors who specialize in that given neighborhood. They often know what deals are actually available before they even go public. So sometimes finding those off market deals is just really through your network.
Exactly, Ariel. Equipped with data from AI and the insights you gain on the ground, you'll be playing real estate on your own turf. It's a major competitive advantage, especially in markets that are poised to grow.
All right, that wraps up our first topic on home field advantage. Now let's dive into our second topic, knowing your game script. In football, coaches don't just show up without a plan. They have plays for every single scenario, every use case. And the same thing is for real estate. You need a clear strategy tailored to your market and your goals.
Yeah, that's what the good coaches do, but not all of them. But there are many ways to play the game in real estate when you're coming up with your strategies. Short-term rentals, medium and long-term rentals, co-living, Section 8, so on and so on. And each have different levels of involvement and rewards. Short-term rentals, for example, they yield higher monthly income but come with more regulations and day-to-day work. Meanwhile, long-term rentals provide steady cash flow and tend to be more hands-off.
So the idea is to pick a strategy, or if you can, try to pick two that fits both your location and your lifestyle. For example, if you live near a tourist hotspot, short-term rental could be very lucrative, but also confirm that you can pivot if you need to long-term rental, just in case any local laws suddenly change.
Right. I've actually tried this recently in Orlando. I uploaded local economic forecasts and population trends into ChatGPT, looking for sub-neighborhoods on the rise. It spit out a few areas that are projected to grow over the next decade. I realized I have a property in one of them already, and that was a huge aha moment. It confirmed that holding on to that property for at least 5 to 10 years could yield better returns than trying to move it quickly. If I get tempted to sell earlier, I can like say around the year 3 or 4, I'll remember those predictions and hold out to maximize the ROI.
Wow, that's really powerful, right? Because sometimes as we purchase these properties, they may work in the given moment, but we don't know the future, what the future is going to hold, how long should we actually retain the property for, and or if maybe we should exit. So that's really great that you're able to gain those insights that the area you have a property in is looking to still prosper afterwards. So you combine that on the ground familiarity with AI's data crunching to really refine that plan. And if someone needs a quick overview, They can just ask ChatGPT, should I do a short term or long term rental in downtown Orlando and get a rundown of pros and cons? Would you say that's the right prompt to use?
Absolutely. And remember, you're not locked into one play forever. If short-term rentals becomes a headache or you don't like it, doesn't fit your lifestyle, or a local ordinance pops up, you can shift to medium or long-term rentals. It's like adjusting your playbook during halftime.
Yeah, definitely. You could pivot and also don't jump into a strategy without understanding its demands. If you really do hate frequent turnover and guest communication, short-term rentals might drive you nuts. Same as if you're managing multiple roommates, like enforcing quiet hours. If that sounds stressful for you, co-living may also not be your best fit. So really think about these things before deciding on what strategy you want to move forward with.
Here's a quick recap for our listeners. Evaluate your market. Use AI or other resources to identify neighborhoods primed for growth. Consider your lifestyle. Be honest about how involved you want to be from the day to day. Do the math. Calculate how each strategy affects cash flow and appreciation. Plan your holding period. If the data shows 5 to 10 years is the best play, stay the course and reap the benefits. Also, have a backup plan. Be ready to pivot if laws or personal circumstances change.
Exactly. I couldn't agree more. And having a solid game script keeps you focused and makes it easier to handle those surprises. Now, let's tackle relying on your teammates. Think of it this way: even the best quarterback needs a reliable offensive line, unless you're Joe Burrow, which you have no offensive line. But in real estate, you want a network of people that can help you fill those gaps because really we can't be strong at everything. So, any of our weaknesses we should be able to pull within our network, whether that's deal finding, renovating properties, or handling legal questions.
Right. Your teammates can include real estate agents, property managers, contractors, mentors, and even online communities. By tapping into their expertise, you get the support and knowledge needed to take your investments further, faster, more than you could on your own.
Right. And here are some actionable points that you can take. There's 5 steps here. One, search for your local groups. So you could just type in your city. So, for example, mine, Tampa, real estate investors, into either Facebook or a community like Meetup. Then try to go to at least one of these events a month. They're usually free too. Second, try to start an accountability group. Gather about 4 to 5 peers at a similar level. You could usually find these peers in those groups or even try on bigger pockets. Try to meet twice a month online or in person to share updates, challenges, and goals. Some of those updates could even be simple, like I analyzed this deal this week and this is what I learned. Third, try to seek mentors. Identify experienced investors who may be 1 to 2 steps ahead of you and align with your strategy. Ask if they offer mentorship, coaching, and maybe be able to help them with one of their tasks to have a mutual relationship. Fourth, leverage online platforms. Join forums like Bigger Pockets or relevant LinkedIn groups, which I actually really do like LinkedIn groups. They're becoming a lot more popular. And they can help with meeting people so that you can get feedback on deal analysis and industry updates. And fifth, consider partnerships. This really depends on what stage you are in your real estate journey. Newbies probably start on your own, but as you continue on and maybe you need more capital as well or a larger skill set, it really does become important to consider partnerships.
Yep. With the right team behind you, you're able to handle more challenges, spot opportunities sooner, and stay motivated.
Yeah, so Terry, quick question for you. Who's been the most helpful or impactful person on your team for past deals that you've done?
Past deals, my real estate agent, one of them, her mother was a real estate agent for the past like 30 years, so she has a wealth of knowledge. So that's been one. You've also helped me a lot with analysis and things like that. So, so the team, just like in football team, the team, you add players, you lose players, but the key is to developing a strong team, those different individual roles, and you just keep people that can fill those roles for you along your journey.
I love that and completely agree. Try to, as you continue to grow, fill people in into your network that can help you grow. So at this stage, let's move on to knowing when to punt. In football, teams sometimes kick the ball away to just avoid a risky play, like going on for it on fourth down with maybe 6 yards to go. So in real estate, you walk away from a deal that doesn't make sense. Please make sure that you don't try to make a deal work that doesn't, no matter how tempting.
100%. Not every property will be a winner, and forcing a bad deal often leads to bigger headaches down the road. Ariel, I know you've got a personal story on this.
Yes, I do. And it was actually my very first deal. So it was a property that it seemed perfect by the numbers and also by location. I was really focused on investing close to transportation, and it was only a 5-minute walk to the train station. No neighbors on one side of the house, so pretty secluded. And I love that privacy that it had, as well as being close to transit. But the problem was the numbers slightly didn't work because the price tag was high and the house also needed updates. So this actually meant I would need to put in work, and I was looking for something turnkey. But the place actually had not horrible layout. The layout was pretty good and just had some outdated laminate in the kitchen and old wooden cabinets. So I thought maybe I can negotiate down so that I would have enough money to do a rehab, a light one. And the seller would not budge, Terry. Let me tell you, they wouldn't even want to go just 5K underneath their current price.
And you really had your heart set on that property, right?
Yeah, I really did. I planned to house hack it, so I pictured myself actually living in there, like utilizing the kitchen, being in the bedrooms. So I was emotionally invested, but the numbers, just really didn't work. And ultimately, I had to say no. I wasn't going to go over knowing that I could maybe be in a potential of negative cash flow. So I kind of felt emotionally like I was passing up on my dream. But as I tried to track the property afterwards and moved on, I saw that it sat on the market for many months. And eventually, after like 3 or 4 months, the seller finally dropped the price by about 5%. So, what this pretty much told me is that this seller wasn't that motivated, meaning that they didn't have a time frame that they had to sell. And maybe they fully own the property in cash, so they weren't worried about an overhead of a mortgage. And the experience, I'd say overall just taught me that if the numbers don't make sense, you have to have the strength to just walk away.
That's a great example of someone that wants to sell but doesn't have to sell. And as real estate investors, we really want the have to sells. Yeah, and that's why it's important to stick to your criteria. Here's a few signs that you might need to punt. A mismatch with your buy box. If the property doesn't fit your turnkey or rehab preferences, don't force it. An unyielding seller, like in Ariel's example. A seller who won't compromise with you can leave you stuck with unforeseen repairs or overpaying. Emotional attachment. Falling in love with the idea of a home can cloud your judgment. Remember, numbers over feelings. Like that's easier said, especially when you're getting started and you start like walking properties and you get further into the process. You do get a little bit involved. So that's something we have to keep in mind, especially as like newer or medium experienced investors. The next one is overextension. Don't compromise your financial safety just to land one property. And the last one is an unclear exit strategy. If you can't see a clear path to profit through renting, flipping, or refinancing, take a step back, reconsider, and punt if necessary.
Agreed. Those 5 tips are excellent to really follow. And as much as I like that house in my own example, saying no ended up saving me from dealing with unplanned rehab costs and the risk of overpaying and not having the right cash flow. So, if only a couple of weeks later, I was actually able to find that property that really worked for me, turnkey, as well as worked by the numbers and in a great location.
That's a great lesson, Ariel. Sometimes the best move is to wait for the right opportunity. All right, let's wrap up with a quick conclusion and our final takeaways.
Yeah, so we've covered a lot of things today from finding your home field advantage using AI and local insights to creating a game script that can help you when to pivot, and also surrounding yourself with the right teammates like a real estate agent, and ultimately knowing when to punt if a deal doesn't fit.
And if there's one hope that we hope that you take away, it's that real estate investing doesn't have to be guesswork. You can talk to local experts, build a team, and use AI tools like ChatGPT, Claude, DeepSeek to analyze markets that'll make you smarter and more resilient. And remember, it's okay to walk away from the deal if the numbers or the situation don't add up.
Absolutely. Your goal should be to make informed decisions. Remember, there's a lot of money at play, so you need to make sure you have the data to back it up. Check population forecasts, run the numbers for multiple strategies, and have a backup plan in case regulations do change. Leverage your network to find those deals, possibly even off market, and learn from those who've already succeeded before you.
Most importantly, stay patient. Sometimes the smartest play is to punt and live to invest another day. It might sting in the moment, but it could save you thousands or even tens of thousands in the long run.
Oh, yeah, couldn't agree more, Terry. So, thanks everyone for joining us on this episode of Tech and Real Estate. If you found this valuable, then please subscribe, leave a review, or share it with someone who you think may benefit as well. Until next time, keep using tech to your advantage and happy investing.
Thanks, everyone, and we'll catch you in the next one.